Best Buy squeaked out some sales in its latest quarter when most were expecting a loss. Let's talk about that with Michael Baker. He's managing director and a senior research analyst at DA Davidson. Thanks for your time.
Sure, happy to be here.
So AI seems to be helping out this retailer. Consumers want in on the new devices so they can take advantage of AI. That seems to be the premise.
Absolutely. We've seen this nice product cycle in laptops. It's now their fifth quarter in a row of positive comps in laptops. So we really started to see this play out, start at the middle of last year and really accelerating. In fact, it was the best unit growth they've had in 15 years in computers for a second quarter. And we think a lot of that is due to AI-driven machines.
And are they doing better online, or are people still coming into their physical stores?
Well, the answer is both. People are shopping online and in stores, but online was 33% of sales this quarter, a full third of sales. That is up from last year. The online comps did beat the in-store comps, but still they're seeing growth in both.
Okay, so Michael, can we break it down even more? Because if people are taking advantage of AI, they're buying laptops, they're buying phones, that kind of thing. What about the rest of their sales? Because they sell so many different things now.
Right, gaming was also strong, helped by the Switch 2 console, which launched in June. But gaming is continuing even post that launch, so that's a good category. They saw some strength, believe it or not, in things like virtual reality glasses and those types of things. But sure, weakness in other categories. Home theater remains tough for them. Consumers are really gravitating to lower-end TVs right now. That's not really Best Buy strength. That's more of a club or mass merchant type purchase. They're also seeing weakness in appliances. Again, the appliance business right now being driven more by break fix rather than remodels or upgrades, and not really Best Buy strength. Best Buy does very well in appliances when people are upgrading, buying new homes, et cetera. So not every category is great, but the balance, on balance, particularly driven by the strength in gaming and computing, led to the first positive comp in about, or the best comp in about 3.5 years. It's, I think, the second positive comp over that time, but the best in about 3.5 years.
Okay, so talk to me about back to school sales as well. Typically, it'd be a big time, I imagine, for companies like this, because all of the kids going to university, for example, even the younger kids want their new electronics before they head back. Do they typically do well sort of August, September?
Sure. Back to school is a big season for them. They comped at 1.6 total company in the quarter, but June and July were up 3%. May actually started off soft, so they saw trends better towards the end of the quarter, and that level, that 3% level, has continued into August. That's back to school. So they're having actually a really good back to school season. What we have seen historically, by the way, is that if you have a good back to school season, you usually have a good holiday season as well. 75% of the time, one leads the other. And so I think it bodes really well, not just for the third quarter, again, which has started off really well, but also the fourth quarter.
Frame it out for me, because they're seeing some better sales. You're seeing back to school typically does do them well. But then at the same time, there are concerns about consumer spending habits in what is seen as a weaker economy. There are concerns they're not going to spend perhaps as much as they would have spent, or as you say, trade down and not buy the higher end TVs. Is that still a concern for a company like Best Buy?
Well, it is a concern on TVs, but again, offset by strength elsewhere. People are spending on computers, the full feature AI type computers, and again, gaming, a discretionary category for sure, but that's doing well. So sure, there is concerns about the consumer right now, but what we're seeing, not just from Best Buy, by the way, but from a lot of retailers that are reporting, is the consumer's actually holding up really well. There was some softness earlier in the quarter in around April and May, in part due to the shock from Liberation Day, if you will. Then also weather wasn't really good early. We had a lot of rain in the spring. But since then, June and July have been really strong retail months. So absolutely concerned about what's going on with the consumer, a lot of unknowns, but so far the consumer's holding up pretty well.
Okay, we are seeing the stock drop today after the reporting, down about 4% right now. I'm just wondering what you think investors are responding to in that report, seeing as how sales came in a little bit better.
Yeah, I'm trying to figure out that a little bit myself. I thought it was a really good report. Now, gross margins did miss, but by 10 basis points, by 0.1%. Not a big deal to me. That was because of mix. We talked about strength in computing and gaming. Those happen to be lower margin categories. The outlook was actually really good. Maybe, again, about 10 basis points lighter on the third quarter operating margin. But I personally think that's nitpicking. I think this weakness should be bought. I will say the stock, I looked back a little while ago. On August 1st, this stock was at $63. So it was up 15% in the month of August prior to today. So maybe giving a little bit of that back. But again, it's not like it was priced to perfection. This is trading at 11, 12 times forward earnings. I think this weakness is overdone and should be bought.
Are they affected at all by tariffs?
Oh yeah, absolutely. And in fact, the stock has been weaker prior to August because of tariff concerns. In some ways, the poster child for tariff concerns, in that they do have exposure to international importers, and they don't have a lot of pricing power. But all that being said, the impacts from tariffs is a lot less right now than we thought it was 6 months ago. They've done a really good job mitigating the impacts by working with vendors, changing country of origin, raising prices in some cases. So if you go back to when tariffs really first started to be an issue, really back in March, the thought was that Best Buy was going to do a lot worse in this tariff environment. They're actually, again, mitigating it pretty well. Their average tariff right now, if you do the blended average of their country of origin as well as their product category, is about 15, 16%. But they are not seeing nearly that rate of tariff because, again, they are working with vendors to negotiate and push it back, and vendors are eating some, and different countries of origins and bringing in different products, and all the mitigation and levers that a lot of retailers are doing. They're actually having a lot of success with that.
Could
so
that
it's not really impacting.
Sorry to interrupt you.
Sorry?
Could that change? We're seeing some of the retailers saying, yes, we're eating the tariffs now, but we do have to pass it on to the consumers by the end of the year. And I'm wondering if that could change for Best Buy as well. And then would it affect their Christmas sales period?
Well, they're eating some. Again, they're sharing it. Some is being pushed back to vendors. Some is being absorbed in their own cost structure. Some is being passed through to consumers. I think that's what we're hearing from most retailers. To the extent that they have to pass more through, and that could impact demand because of elasticity of demand. Sure, that's a risk. But again, that doesn't really seem to be what's happening right now.
Got it. All right, Michael, I will leave it there. Thank you for joining us. Michael Baker, Managing Director, Senior Research Analyst, DA